Apple just had a huge earnings beat. They were expecting $1.43 per share on the earnings side. They came in at $1.52. Their revenue came in at $97.3 billion when they were only expecting $93.98 billion. Huge beat, but the problem is the supply constraints. They're expecting, despite $9 billion of revenue growth year over year, they're expecting a $4 to $8 billion hit in this upcoming quarter. So while we had a nice pop initially following the earnings report, it has quickly pulled back since then. So the big question now becomes, do we buy the Apple stock post earnings, knowing what we know now? Is this the opportunity to get long? We're going to talk about all that. We're going to go over this chart in great detail. But first, make sure that you pound that like button and subscribe to this channel and get all the notifications of every time I'm doing a live stream or one of these videos. We're always busy throughout the week. You want to make sure that you're subscribed to this channel, as well as clicking that join button down below so you can get all my stock market research if that's what you like to have. But probably one of the most important things that they announced was another $90 billion of buyback. Guys, that's like $360 million worth of stock that they're buying of their own each and every day. That's also one of the reasons why it probably hasn't fallen as much as what you've seen a lot of these other tech companies fallen so far on the year. Where the NASDAQ Composite's down over 20% on the year, you have Apple that's only down 13%. So Apple has held up really, really well. And it's one of the big reasons why this market has held it together so well over the past 4 months. But with all that being said, let's go ahead and get right into the charts here. One of the first things that you're going to see when you look at this Apple chart is how range bound it has been, essentially going back to November. Here you got a massive range from about 150 all the way up to its all-time highs at around 182. This is what has contained the Apple stock price so well and essentially kept it from falling apart, where so many of your tech stocks have already dropped like 75% off of their all-time highs. And some of them, it's been as recent since just the November highs that they were putting in. But here you got a nice range-bound stock. Not uncommon for a lot of these FANG stocks. For much of the past 18 to 20 months, Amazon and Google have been range-bound. You haven't seen a lot of price movement out of them. And yes, some of them are starting to break down now, but for the good part of the past year, they have been very much range-bound. Apple's starting to look more and more that way as well. So in this market, I don't think that there's a good likelihood we're going to see Apple break out of this range to the upside unless the entire market can put in a bottom. But what becomes more and more likely as the market continues to weaken is that we have a breakdown out of this range. And if that happens, that's where it could get really ugly in the market as a whole. But let's go ahead and get rid of this box here. And let me show you something else that I find very intriguing. And that is the support on this 200-day moving average. This white line here is your 200-day moving average. And multiple times since the March 2020 lows, it has found support at this 200-day moving average. And it's automatic buy programs that are just kicking in every time we test or even get near this 200-day moving average. Again, March of 2021, you had it again in June of 2021. Then we pulled back just recently in March of this year to it. And yes, we broke below it just a little bit, but immediately saw one of the best winning streaks in the history of the stock immediately thereafter. And now we've pulled back to this trading level and bounced yet again. And so the question becomes, you had a big 4.5% rally in the Apple stock. Can it hold this level? So far in the post earnings, it's given up much of the day's gains. This was a classic buy the rumor, sell the news event where retail traders completely aped into the stock. And they did the same thing with Amazon. I'm thinking to myself, why are they even doing this ahead of the earnings? Especially like after what you've seen with Google and Netflix and Facebook last quarter and Netflix last quarter. There's a lot of volatility suddenly in these FANG stocks. It doesn't necessarily mean that Apple was going to follow the same course, nor did it, but the risk was there for a potential sell-off going into earnings, and who wants to drive this thing up 4.5% before then? But as always, there's the apes that will FOMO right into those trades. And here again, we have the 4.5% rally and then the sell-off that takes it right back to this 200-day moving average. Now the question becomes, will it be able to bounce off of this 200-day moving average yet again? Maybe before even the market opens on Friday, you will see a recovery that sends price right back up to where it closed the day at today. So going forward, this 200-day moving average could be a good spot for it to bounce off of. But even more so, if you go all the way back to September of last year, there is a huge support level that shouldn't go unnoticed here. This support level has been huge for the stock, and multiple times, even more so than the 200-day moving average during the same time span, it has consistently bounced off of it. 7 times to be exact. And yet again, where do we find ourselves? We're testing that rising trend line, and it's a key support level. So if this can hold and the 200-day moving average can hold, yes, there's some hope for the bulls, but I would preface that by saying be careful, because even if those levels hold, we're still in that bigger box that I was talking about just a few moments ago, this huge range from 150 to 182. So if it can bounce here and you can get in at 165, there's very limited reward unless the market can rebound and in the process send this stock back to all-time highs. So this is how I would wrap up the technicals on Apple here. 200-day moving average and this longer-term trend line here. These are your two key buy areas for the stock. Break below it, not a good sign for the stock, not a place where you want to start buying it at. If it breaks these lows from March, that would be a major sell area, because all of a sudden it is actually putting in a significant new low. It's breaking out of the range that I highlighted earlier. It's breaking below that 150 level, and then you're at risk for a much bigger market meltdown as a whole that drags not only the market down lower and Apple, but also tech as a whole. And then after that point, you really want to start bargain hunting on the stock. And if it can come in, let's say around 138 to 140, nowhere near testing that now, and it would take a long time to get there, but that's the kind of mindset that you have to have. Where would I go bargain shopping at? So while I'm not saying it's going to get there, I'm just trying to give you the parameters. The 200-day moving average, that rising trend line, those are key areas that the bounce can be played off of. But if it breaks below the March lows, that becomes a huge red flag, and then you want to start seeing, okay, where does it want to settle at? Maybe it's that 138, 140 area. That would be a huge hit to the markets. I don't have a huge level of confidence that it's going to get there anytime soon. It would take a huge market correction for that to unfold. So the takeaways here with this video, I don't see there being a lot of huge upside to the stock. I see that there's some good buying areas and places where you can contain the risk, but I'm not sure there's a lot of reward to be made as long as this market's struggling to find its footing. But if that can turn around and you can see a significant bottom get put in, and Apple still hasn't violated these levels yet, then maybe you have a good opportunity to see this stock recover and go beyond its all-time highs. Now, if you enjoyed this video, make sure that you like and subscribe, guys. And check out the membership down below by clicking the join button. You'll get all my stock market research each and every day. That's going to include all of my FANG stock research on all the indices, plus weekly watch lists for both bullish and bearish stocks, and my trade setups that I'm following each and every day, plus the most intriguing charts that I come across for your consumption. So, thank you guys, and God bless.